Now that the world is moving so quickly into this new world, and Bitcoin has become so successful an investment, many people are trying to figure out, okay, how do I get involved with the new world? And when I say get on the right side of change, we think there's going to be a lot of disruption to the traditional world order. And we were saying, you know what? Apple is probably going to be disrupted by artificial intelligence. AI is the biggest technological disruption in history. And if they're not going to get it right, we're not going to be there. Now that the world is moving so quickly into this new world, and Bitcoin has become so successful an investment, many people are trying to figure out, okay, how do I get involved with the new world? And when I say get on the right side of change, we think there's going to be a lot of disruption to the traditional world order. And when I say that in terms of people understanding what I mean, I think many people think Apple is a very safe investment because huge hoard of cash, very successful smartphone, number one market share of smartphones in terms of profitability by far. And yet we can tell you, and this is one of what's called the Mag 6 that led the stock market over the last few years.
The top 6 stocks.
The top 6 stocks. The market was very narrowly focused on this ilk of stock. And we were saying, you know what? Apple is probably going to be disrupted by artificial intelligence. And one of the reasons we started asking questions very early is, what is the ultimate mobile device? Ultimately, it's going to be an autonomous vehicle. Apple should have been all over that, and they were trying, and we saw one management turnover after another. This is an AI project, and what we were learning as they were turning that team over time and again is they weren't getting AI right. They were not positioning correctly.
You're concerned for Apple?
I think Apple, it has so much cash. It has such a loyal customer base. It will be fine, but maybe its revenue growth has slowed to almost nothing. And so maybe it'll be a mature cash cow. That's not what we do. We invest in technologically enabled disruptive innovation. AI is the biggest technological disruption in history. And if they're not going to get it right, we're not going to be there. Many people used to invest in AI through one stock. That was NVIDIA. That was the check the box. I own the GPU, the chip manufacturer, which is the most important chip manufacturer in the AI age. And its valuation, meaning its price relative to earnings, really got up to very heady levels. And we were saying at the time, well, if NVIDIA's valuation is correct, there are going to be a lot of other winners. Who are they? Well, our largest position in the flagship strategy, ARKK, is Tesla. And as we were trying to help people understand why we were swapping away from NVIDIA to stocks like Tesla and Palantir, which is a software provider, we were trying to explain that this new world around AI is going to happen very quickly. And Tesla is the largest AI project on Earth. I posted that on X, and Elon liked it, so it must be true. But it is true if our research is correct. We believe that the entire ecosystem associated with autonomous taxi networks is going to be worth $8 to $10 trillion in terms of revenue generation in the next 5 to 10 years. And if you want to put that in context, the entire GDP of the world today is about 130 trillion. So 10 trillion is going to move the needle.
Driving.
Transportation,
Right.
broadly defined, yes. And it's not just on the ground, of course. As we've studied autonomous taxis moving forward, we believe the cost of transportation will come down fairly dramatically. So in the U.S. today, an Uber costs roughly $2 to $4 per mile. At scale, now this may not be for 5 to 10 years, but this is the direction that Tesla certainly is headed. We believe that Tesla will be able to offer a service for 25 cents per mile. And because of that, we think there will be much more congestion in the roads. When you cut the price of something, you get more of it.
Yeah.
And that led us into the air. And so we've been studying eVTOLs.
What's an eVTOL?
eVTOL is an electric vehicle takeoff and landing.
Like a drone type
A drone, but for people.
Yeah.
So we own Archer in our portfolio. And of course, AI is a part of this new world as well. And it's a part of the defense world as well, as we are trying to save our soldiers and move out there with autonomous drones. So autonomous mobility on the ground, in the skies, ultimately on the water. So that's one big, we think that's going to be the biggest in the short term in terms of revenue generation, the biggest application of AI. We think the most profound application of AI is going to be in healthcare. Because of AI, and this is already beginning to happen, we are able to diagnose cancer with a blood test in stage 1. Think about that. If you discover cancer in stage 1, you can save most people, right? And maybe even before stage 1. Why? This is the convergence of sequencing technologies. So DNA, RNA, protein sequencing technologies. And then the third technology that is breakthrough and already making a difference is CRISPR gene editing. The convergence of those 3 technologies is beginning to cure disease. So a company called CRISPR Therapeutics, which is one of the largest in our ARKG fund and in the top 10 in our ARKK fund, has developed a therapy to cure sickle cell disease and beta thalassemia, both of those are blood-related diseases, with one treatment. Think about that. Now, the preconditioning for that is gruesome. It involves, it's almost like chemotherapy, which is going to change. It was in the summer of 2015. We got in at roughly $250. Today it's $104,000, I think, roughly. So we did get in very early. And we knew we were onto something, really, when people were making fun of us, saying, okay, that's a marketing trick. You're new to our business and, new to the new fund world, and you're trying to attract attention. And we were thinking, wow, they have no idea how much research we've done on this. And Art Laffer, my professor, again, from USC, we had him read our first white paper on Bitcoin. Bitcoin, could it serve the 3 roles of money? So means of exchange, what we use every day to buy things, store of value, like gold, and unit of account. Would prices be quoted in terms of Bitcoin? Chris Berdinsky was our first analyst on Bitcoin, wrote the paper, Art read it, and, added to it enormously in terms of economic theory, which was great for us. And then he said to us, this is what I've been waiting for since the U.S. closed the gold window in 1971. A rules-based global monetary system, like Bretton Woods, under the gold exchange standard. And I said, Art, that's a very big idea. How big is it? And he said, well, how big is the monetary base of the U.S.? Back then it was $4.5 trillion. And Bitcoin's market cap or network value was $6 billion. And I said, okay, that's a very big idea. And we were trying to get it into our portfolios. Regulators were hesitant, but I bought it right then for myself and haven't sold it. And I'm very happy with it. Personally, because
what
we
price?
couldn't buy it, $250. So we couldn't buy it back then, but we finally got through the regulatory process. And we were able to put, the New York Stock Exchange said, okay, you can put a 1% position in the portfolio. And it was of a grantor trust called GBTC. So we did, and we just never sold it. They didn't tell us we had to keep it at 1%. So,
Oh, it's risen to be more.
yes, it ballooned.
If you had $1,000 to invest and you had to invest it somewhere, where would you be investing it?
Well,
And how would you be like the general philosophy towards wealth creation at such a stage? If you had $1,000, how would you be thinking about creating wealth for yourself?
a couple of things. Averaging into either an ETF, exchange traded fund. So it treats a group of stocks like one stock. So ARKK it's 36 stocks, but you can buy them by purchasing ARKK. Depends what you've bought. If you buy a strategy like ours, which would be in the aggressive growth strategy, put it in, averaging in over time, just like with Bitcoin, as I mentioned earlier, averaging in over time.
What does averaging in mean?
Averaging in means, buy a little every month, maybe every payday. I think one of my daughters was buying Bitcoin every week, but not a Bitcoin. She couldn't do that. A Satoshi, so. And close your eyes. This is a long-term investment. If we're right, according to our analysis. Now, this is our research, our analysis, no promises. We can't do that. But according to our research, the technologies around which we have centered our research and which have focused our investments, we believe will go up more than tenfold in the next 5 to 10 years. And that's how much explosive growth we have ahead of us as these technologies converge and create incredible opportunities for investors. And, I'm hearing a lot of people, as they get into investing, of course, they have their day jobs. But once they have accrued enough, they're making choices about dialing down their day jobs and spending more time investing. You asked, what are some of the jobs of the future going to be? I think individual investors are going to be providing for themselves if they are investing on the right side of change. I am such an optimist. I really do have to dig down deeply. If you had asked me this a few weeks ago, I would have said, this tariff situation is going to blow the global economy up if we're not careful. So I'm much more settled about that right now. I'd have to say I am concerned that there are going to be people caught out by these new technologies and for whatever reason not willing to adapt, because there are going to be huge opportunities if they do. And so one of the reasons we give away our research, I'm very honored to do a podcast like this, is to get that word out. There is so much information available. You can just go to our site and listen to our podcasts. And if anything inspires you, go for it, because the opportunities are going to be enormous.
When you say you're concerned people might get caught out
in, disrupted industries. I mean, we think the whole transportation industry is going to be disrupted. We think retail as we know it's going to be disrupted as we all...
Retailers in like shops and stuff and...
Yes, although if they adapt with more social, personal experiences, I think that anything physical, you'll want to have a social dynamic associated with it. But in terms of what I think is going to happen to retail is we're going to have our personal shopping assistants, and they're going to anticipate what we want, which I can't wait. I hate shopping. Anticipate what we want, or basically flag something that they know we would like if we knew it were available. And they'll be disintermediating all of the traditional sources because they can go anywhere in the world. So just think about almost every sector is going to be disrupted. Healthcare is going to be disrupted enormously, I think, for the better. But those who are wedded to doing things the old way are probably going to be disrupted,
Welcome to the deep dive.
Good to be here.
We're plunging into a world today that's just defined by incredibly rapid change. I mean, the traditional order feels like it's being reshaped almost constantly.
It really does. And the big question everyone seems to be asking is, how do you navigate this?
Or maybe, how do you actually find yourself on what people are calling the right side of all this disruption?
Exactly. That's really the heart of our deep dive today.
Yeah, we've been digging into some source material really focused on perspectives about this whole global shift. And we're drawing quite a bit from a recent conversation with a well-known investor, someone really keyed into disruptive innovation.
Right. So the mission today is sort of to unpack these key areas of technological disruption that were highlighted.
We're talking AI, obviously, and its huge impact everywhere.
Yep. And the future of transportation, how we get around healthcare too.
And even something as fundamental as money itself.
And along the way, understand the investment thinking, the philosophy behind engaging with these massive trends.
It's a moment where you hear AI being called, well, potentially the biggest technological disruption in history. It's right at the center of everything.
That perspective really shines through in the material we looked at. It talks about this fundamental change to the, quote, traditional world order.
And how fast this new world is moving.
Yeah, there's this palpable sense that people are actively trying to figure out how to get involved, how to keep up. It's moving so quickly.
And one of the really interesting points, I thought, was that basically no one's immune, not even the really established giants.
Right, take Apple, for instance.
Yeah, Apple. The sources frame them as, a Mag 6 leader sitting on this massive pile of cash, dominating smartphone profits. They look solid.
Totally. But the analysis suggests even a company like Apple could face, well, pretty serious disruption from AI if they don't play their cards right.
It really raises that question about legacy success, doesn't it? Does it guarantee future resilience?
Not necessarily. The material pointed to some specific struggles Apple apparently had, mentioning management turnover after another in their autonomous vehicle projects.
Right, citing that as evidence they, quote, weren't getting AI right, maybe, and weren't positioning themselves correctly for this shift.
It just underscores that even having vast resources and incredible brand loyalty, it doesn't automatically mean a smooth ride through a paradigm shift like this.
Now, the sources weren't saying Apple's doomed or anything. They'll likely be fine thanks to that cash hoard and customer loyalty.
Sure, fine in that sense. But the outlook presented was that their revenue growth could really slow down significantly.
Turning them into what was described as a mature cash cow.
Exactly. And as that investor perspective makes clear, that's just not where you look if you're hunting for those explosive, disruptive growth opportunities.
Which naturally leads to the next point. Where are investors focused on disruption looking?
Well, initially, it seems like a lot of people, maybe the broader market, found their AI exposure through primarily one stock, NVIDIA. It became almost the check-the-box play for AI chips. Easy answer.
But the analysis in the source material we reviewed suggested that NVIDIA's valuation got pretty heady, a bit steep, maybe?
That's the word used, heady. And the logical next step in that thinking, as presented, is, okay, if NVIDIA's really high valuation is justified.
Meaning the AI revolution is that big?
Right. Then there have to be other major winners cropping up. You can't just have the chip maker win big. What about the applications, the other tech?
So that prompted a search elsewhere.
Which is where Tesla comes into the frame as a, well, the really key focus in their strategy.
Okay, this part of the research was fascinating. Tesla is highlighted as a huge position for them.
And the claim made in the source material is bold. They call Tesla the largest AI project on Earth.
Wow. And they even mentioned, I think, an ex-post liked by Elon Musk as sort of backing up their own research conviction on this.
Yeah, they reference that. It reinforces their belief based on their analysis.
So how does that translate? What's the application?
Autonomous taxi networks. Robo-taxis. That's the specific focus.
And the scale they're talking about here is just staggering.
It really is. An ecosystem potentially generating, get this, $8 to $10 trillion in revenue.
Trillion within the next, what, 5 to 10 years?
That's the projection discussed. Now, put that against global GDP, which is roughly $130 trillion today.
Okay, yeah. $8–10 trillion in one ecosystem would absolutely move the needle globally. That's transformative.
And the cost figures presented are just as disruptive. Tesla potentially offering autonomous rides for maybe 25 cents per mile.
25 cents compared to current ride sharing, which the sources put at roughly $2 to $4 per mile.
It's a massive difference.
Yeah.
And it brings up that basic economic idea. When you cut the price of something, you get more of it.
So drastically cheaper transport means way more demand.
Exactly. The potential implication discussed is, initially at least, much more congestion on the roads. Because suddenly it's incredibly cheap to just hop in an autonomous vehicle.
Okay, so that leads to the next problem, or opportunity.
Right. This potential congestion issue then points towards the next frontier in disruptive mobility discussed in the sources. eVTOLs.
Electric vertical takeoff and landing aircraft?
Basically, yeah. Like a drone, but for people, as they put it. A possible way to bypass ground traffic.
So the vision for autonomous mobility isn't just cars, it's ground, skies.
And eventually water, they mentioned. Plus, even touching on defense uses, like autonomous drones for rescuing soldiers.
So while things like robotaxis might be the biggest AI revenue generator in the short term,
The overall scope for autonomous mobility is clearly seen as much, much broader.
but shifting gears slightly, while mobility might be the biggest revenue place soon, the source material argued pretty strongly that the most profound use of AI that's going to be in healthcare.
Yes, absolutely. They see it as this incredible convergence. You've got AI plus these amazing advancements in sequencing tech, DNA, RNA, protein.
Understanding the building blocks of life at a deeper level.
Exactly. And then you add in breakthrough gene editing tools like CRISPR.
And the result of bringing all that together.
The potential, as presented, is that we're beginning to actually cure disease. Not just manage symptoms, but cure.
That's huge. Was there a specific example?
Yeah, they mentioned CRISPR Therapeutics, developing a therapy aimed at curing sickle cell disease and beta thalassemia.
Described as blood-related diseases.
Right. And the potential is curing them with just one treatment. Think about that.
It's revolutionary. And what about diagnostics?
Also, huge potential highlighted there. AI enabling cancer diagnosis potentially at stage 1 just from a blood test.
Wow. Just a simple blood test.
I mean, consider the implications. If you can reliably catch cancer that early, you can save most people. The research even suggests maybe diagnosing before stage 1 is possible down the line.
That's incredible. Now, they did acknowledge some challenges, right? Like the current prep for that sickle cell therapy.
Yes, they mentioned the preconditioning is currently tough, described as gruesome, almost like chemotherapy. But the expectation outlined in the research is that this will improve. That part gets better over time.
So it's clear this healthcare disruption is seen as overwhelmingly positive for the better.
Definitely for the better for patients. But the analysis also included a warning for the industry itself.
That those wedded to doing things the old way in healthcare are likely going to face disruption from these advancements.
Absolutely. Change is coming, whether incumbents are ready or not.
Okay, so moving from healthcare to a completely different realm. Money, the future of money. The source material brought in Bitcoin here, right?
It did, yeah. Including a personal anecdote from the investor. Shared buying Bitcoin way back when it was roughly $250.
And now it's, well, the figure mentioned was roughly $104,000.
Yeah, quite the ride. And they noted, haven't sold it. Personally very happy with it.
But getting it into their actual fund was harder initially.
That's what they recounted. Regulatory hurdles meant they couldn't buy it back then directly for the fund. Eventually, they got approval via the NYSE for a small position, initially 1% through GBTC.
And the key point was they just never sold it.
Right. And as Bitcoin's value soared, that position ballooned way past that initial 1% allocation.
What was really interesting was bringing in the economist Art Laffer's perspective. as cited in the sources.
Yeah, that was insightful. Reportedly, Laffer sees Bitcoin as potentially fulfilling the role of a rules-based global monetary system.
Kind of like the Bretton Woods system under the gold standard?
Exactly. Something he felt the world lost when the U.S. ditched the gold window back in '71, and he'd supposedly been waiting for something like it ever since.
And there was a comparison used to show the potential scale he saw.
Yes, comparing the U.S. monetary base at the time, around $4.5 trillion, then to Bitcoin's market cap back then, which was only about $6 billion.
Just highlighting that massive perceived gap, the potential runway for growth in his view.
Precisely.
Okay, so we've talked about AI, transport, health, money, massive disruptions, potential trillions floating around. What does this all mean for, the average person listening, especially if they're thinking about investing?
Well, the sources tackled that directly. Gave some advice for someone maybe looking to invest, say, $1,000 in this whole disruptive innovation space.
And the advice wasn't go pick the next Tesla?
No, definitely not trying to time the market or pick individual winners, especially given the volatility. The recommendation was to consider averaging in.
Dollar cost averaging.
Exactly. Averaging into an ETF, an exchange-traded fund, that focuses on these kinds of aggressive growth strategies, like an ARK strategy was mentioned as an example.
And averaging in just means investing a set amount regularly.
Yeah, simple as that. Maybe monthly or every payday. Could even be smaller amounts weekly, like buying Satoshis regularly for Bitcoin exposure. The key is consistency, not timing.
And the other crucial part of the advice seemed to be about perspective.
Absolutely. Take the long view. This isn't about quick flips. It's a long-term investment. The source material even used the phrase, close your eyes, basically meaning tune out the short-term noise.
Let the underlying trends play out over years.
Right. And based on their research, with the standard disclaimer, of course, no promises, the outlook presented was that these core technologies they're focused on, they could potentially appreciate more than tenfold in the next 5 to 10 years.
More than tenfold. That's a definition of explosive growth.
It is, and this ties back to that bigger theme of navigating change.
How so?
Well, the perspective is that by investing on the right side of change, individuals can potentially position themselves to benefit from these new economic waves.
Sort of providing for themselves in a future where maybe traditional jobs are also being disrupted.
That seems to be the underlying idea, yes. Aligning your savings with the direction the economy is heading.
So it's clear the sources paint a picture of both, enormous opportunity, but also real concern.
Definitely both. The concern is palpable about people getting caught out, blindsided by how fast and deep these changes are, especially if they're in industries facing major disruption.
And the examples cited were pretty broad.
Yeah, the whole transportation industry was mentioned again. And retail as we know it.
How did they describe the retail disruption?
It painted this picture of AI-driven personal shopping assistants. They anticipate your needs, know your style, your budget.
And they can source things from anywhere.
Exactly. Effectively disintermediating all of the traditional sources by going direct, finding the best product and price anywhere in the world.
Though they did add a note that physical retail might survive if it shifts its focus.
Right, if it transforms more into providing more social, personal experiences, things you can't get online. But the old model, challenged.
And same for healthcare, as we discussed. Disruption is largely for the better overall.
But again, those wedded to doing things the old way are probably going to be disrupted. It's a recurring theme.
So the overarching message seems to be, yes, there are risks, especially for those resistant to change, but for those willing to adapt, learn, maybe reposition themselves.
There are huge opportunities. That comes through loud and clear.
And is that why this research is shared? To get the word out?
That seems to be the motivation presented. Sharing the research, making information available, like on their website, as mentioned, is framed as a way to help people see these shifts coming and potentially engage with those opportunities.
It's undeniable, really. We're living through technological change on a scale that feels unprecedented. It's reshaping entire industries, transport, healthcare, finance, retail, you name it.
And the material we discussed today paints this vivid picture of both the profound challenges this creates, but also the immense potential rewards on the other side.
Understanding what's driving these shifts, especially AI, and how it connects with other powerful technologies, feels pretty essential for anyone trying to figure out the future.
Absolutely. Whether it's for your career, your investments, or just understanding the world around you.
So maybe a final thought for you, our listeners, to chew on as we wrap up this deep dive. Given everything we've unpacked, the scale, the speed, the sheer breadth of this disruption across so many sectors, where are you personally seeing the biggest potential shifts? Or maybe the biggest risks?
Yeah, think about it in your own life, maybe your industry, or even just how you approach investing.
And the bigger question, perhaps, how can you actively position yourself, your skills, your capital to engage constructively with what's being called the right side of these really transformative changes? Something to think about.